Hey everybody, welcome to another video. This is a video of something that I've wanted to speak about for a while. This is something that massively helped me with my trading, is understanding where we are within the week and understanding our bias to make sure that we are trading in the right direction. So what I mean by this is identifying the weekly candle. And I'm going to break this down a little bit more, but first of all, let's just do some analysis on what's going on with GJ at the moment. Now we can see that we are on the weekly time frame, and we are having that bullish move higher. However, all I'm interested in what's happening recently. We don't need to bother about any of this. Okay, this goes all the way back to November 20. I'm just interested in this. And what I can see at the moment is we've just made a higher high. However, we had this nice bullish move, bullish engulfing candle, followed by 3-wick rejection, and we've got this bearish move, and then followed by a gravestone doji as well. Gravestone doji is basically formed by the fact that we have buyers pushing price higher, and sellers have then taken control and made price close basically exactly where it started at the beginning of the week. And then following that, we have this nice bearish engulfing candle, almost a Mariposa closure. Another doji, not quite a gravestone doji, but then followed by what you could argue is a shooting star pushing price downwards. So what I'm going to do is just concentrate on let's do this candle here. And so I'm expecting price to move lower based on the fact we've got this nice bearish engulfing and the wick rejection from the highs. Also, we've grabbed liquidity from here as well, which is a good sign that we could be moving lower. So just remember, I'm just talking about a week's price action here. What I mean is, I've drawn an example up here. Just it'll be quicker than me drawing it whilst on the video. But if we have a candlestick here, and again, let's say that we are in a bearish trend. So the previous candle was like this. Here, I draw another wick on, something like that, okay? Now, we have this nice bearish move, and we are expecting another bearish candle to be printed after that on the weekly. So what do we do? How do we trade this? When can we expect the move to go in our direction, which is to the downside? So what you have to understand is, what is the wick, right? And I've drawn this to the left, is that the wick is at the beginning of the week, if we are bearish, we are looking for price to move higher. So we're making higher highs, higher lows, higher highs, higher lows, higher highs, okay? Then we get to around midweek. Everyone is thinking, yeah, price is now bullish for the week and therefore continues too long. However, what happens? Bang, we break through and we take out the stops which are below here and stops which are below here. Okay, we also have this nice breaker structure. So instead of making higher highs and higher lows, we've now just made a lower low. We know when we've made a lower low, we are then looking for a lower high. And we can look for our nice entry here before price drops to create the candle for the week, which is that bearish move that we are expecting. So you need to understand where we are in the market based on where the candle is and how the candle looks, and has a wick already been created for the week? If so, we can then expect that move to the downside. If it has not yet been created, then we need to again wait for that breaker structure to then jump on shorts. So if this makes sense, I've tried to draw it in line with it. Beginning of the week, Monday, Tuesday, Wednesday, we've created the wick, followed by the breaker structure and short move. And then Friday, we've come down to finish off the candle, which is printed for the week. So what I mean by this is that I'm going to take this candle here, which is a weekly candle, and I'm just going to highlight this from here to there. Okay, so then what we'll do now can be something like that. I'm just going to go down to a lower time frame. Let's go to an hour. It will be easier to see. Here, almost exactly how I've drawn it. So beginning of the week, we have here, right? And we know we are bearish because we look to the left. You can see we've got this nice big bearish move to the downside. So we can expect that shorts are still the way to go, because you want to be going with the trend. So what happens when we get to the markets at the beginning of the week? Market opens, and if I just draw on this path, you can see making higher highs, higher lows, right? Higher highs, higher lows. Really simple stuff, right? Higher highs, higher lows, higher high. So you could expect people coming to the charts at the beginning of the week thinking, I'm now going to short this based on the fact that we've had this huge bearish move the few weeks before, and you can just see bearish move, lower low, lower high, lower low, lower high, lower low, lower high. So now what you want to be doing is waiting for confirmation of that bearish turnaround. So we can say around Monday, Tuesday, Wednesday. Then what do we get? If we're saying that this is our last high low point, and we can just draw this across here, that's our last real area of support before we made our higher high. So this is the ultimate high that's been created. This is our area of support. So then what happens? We get to Thursday, and this can happen sort of Wednesday lunchtime onwards, is how I normally see it. And we then get that nice break of structure. So what I mean by break of structure, we have now taken out what was previous support. So if I just draw this on, just to make it clear, break of structure. If you don't understand structure, learn it, okay? Because this will save you time and time and time again. If you can understand structure, then I would say you are the majority of the way there of being a successful trader, because you know which way to trade. So now we have our break of structure. Once we've got our break of structure, again, we want to sell from the highest possible point, sell from the highs, buy from the lows. So then what we want to do, if I just remove some price action here to say, you've got this nice break, you are not just going to go in for a short here based on the fact you've got a break. We know that once we have a break of structure, we normally come back up to retest. So again, this, as I drew earlier, we are looking for break of this, price to come back up to then go short. So we've now got that break. So again, don't FOMO into the market. You just need to sit back and wait. And then when price comes up to your sort of area of interest, okay, you can then start to look for shorts. Now again, if we are looking for shorts, we need to obviously take into consideration what's above, make sure that stops are just below the high. We know that this is going to be the high for the week on the basis that we have now changed trend to the downside. And then we can look for that nice short position. As you can see, spikes into our area and bang, price absolutely drops. And this is how you want to be trading throughout the week. Just don't go in blindly and say, well, I'm clearly in an uptrend on the 1 hour, therefore I'm just going to continue going long. If we are bearish for the week and we are in an uptrend come Wednesday, you can likely expect that on Thursday price is going to dump. So again, you might want to say, well, maybe I'll stay out the market now. If you aren't sure, absolutely stay out the market. But if you see the signs that you need, all right, to be going short, and you see this and it's towards the end of the week and you then get the pullback, go for it, because ideally that's what we are looking for. And that helps me massively in trading. When I understood how to read bearish weekly candles, bullish weekly candles, it changed my trading. So let's just go back to the weekly and let's zoom in. You can now appreciate this. So why is the wick created? Because we have, again, the bullish move and then price drops. How is this wick created again? So look, even if let's go into this one now. You see this time and time again. Bear with me, my computer's been a little bit slow. Let's highlight doji, bang, and go back down to the 1 hour. Same thing again, right? The beginning of the week, so this is where the week starts, right? Even though we are bearish here, again, we've got break structure. This is exactly the same thing that I've just shown you. Price has come into a level, bang, we've dropped, okay? Dead simple stuff. So coming to this now, beginning of the week, we have higher high, higher low, higher high, and then what do? Bang. Even if we're saying this is the structure point, we could probably use this as well. But let's just use this as, just to show you, again, you have that nice break of structure. Prices then come back up to retest your area. And then bang, we are down. exact same thing. And you can do this week in, week out. And if price is continuing to trend to the downside, which it can do for months and months on end, I've been trading in EG, and that's been in a downtrend now, I think since December 20, and it just plays out like this. So something that you want to consider, and again, that massively helped me. So I would suggest you do your own research, back test it, forward test it, and just understand how price action moves. And I can assure you, if you can get the correct direction and know which day we are in the week based on how you want to trade, it can help you with your consistency and profitability. So I hope that helped. Yeah, and watch out for the next YouTube video.